Introduction. Multifamily real estate investing has become increasingly popular in recent years, as it provides investors with a stable source of income in the form of rent and long-term capital appreciation. The demand for multifamily properties has been on the rise due to changing demographics, urbanization trends, and lifestyle preferences. In this report, we will analyze the top-performing multifamily investing strategies in the current market, including industry trends, market analysis, property types, and investment types. We will provide a comparative analysis of different strategies, including their risk versus reward potential, and recommend one or two optimal strategies for a novice investor. Industry trends. The multifamily market has been growing steadily over the last decade, with no signs of slowing down in the near future. According to a report by CBRE, the U.S. multifamily market is expected to continue its growth trajectory, with rent growth forecasted to increase by 4.4% in 2021. Demographic and economic changes are driving this growth. The share of millennials and Gen Z living in apartments is increasing, and rental housing is becoming the preferred choice for a growing number of Americans. Remote work and flexible leases have also increased demand for rental housing. These factors make the multifamily market attractive to investors seeking stable income and long-term returns. Market analysis. Multifamily properties are not homogeneous, and an investor in this market must consider a range of factors, including location, property type, and market conditions. According to a report by NRE, apartment markets in southern and midwestern regions offer better cap rates and rates of return, compared to markets on the east and west coasts. Additionally, property size is an important factor to consider when selecting a property. Small properties typically offer higher yield than large properties. However, large portfolio transactions with more than 1,000 units have been on the rise and offer economies of scale, easier management, and the potential for larger returns. Property types. Multifamily properties can be subdivided into several types, including garden-style apartments, mid-rise and high-rise buildings, and student housing. Garden-style complexes, which tend to be located in suburban or semi-urban areas, contain low-rise buildings arranged in a courtyard or garden-like setting, while mid-rise buildings, which typically have between 5–10 floors, are suitable for urban or suburban living. High-rise buildings, on the other hand, offer a different lifestyle and generally cater to a more affluent and urban population in central business districts. Additionally, student housing is a specialized type of multifamily property that targets college students. Investment types. There are several investment types in the multifamily sector, including direct ownership, syndication, and real estate investment trusts. Rights. Direct ownership involves purchasing, managing, and operating the property by an individual or a group of investors. Syndication involves pooling resources from multiple investors to purchase and manage a property. Finally, rights are public companies that invest in and manage a portfolio of multifamily properties. They offer investors diversification and liquidity but tend to have lower returns than direct ownership or syndication. Comparative analysis. Every multifamily investing strategy has its own unique risks and rewards potential. Direct ownership offers the highest returns but requires the highest level of management and involvement. Syndication offers a lower entry barrier and allows investors to pool resources, reducing individual risks. On the other hand, it has lower returns compared to direct ownership. Rights are the safest and most passive way to invest in the multifamily sector, but returns are relatively low. Recommendations for a novice investor. Syndication offers a good balance between returns and risk. In addition, investing in mid-sized garden-style or mid-rise properties located in southern or midwestern regions offers the best returns in the current market. Properties with a focus on cash flow and long-term capital appreciation are usually the most rewarding. It is essential to research the sponsor's track record and ensure that the property meets the investor's goals and expectations. Conclusion. The multifamily investing sector is growing, attracting investors seeking stability, returns, and diversification. Current trends, market analysis, property types, and investment types are all factors that influence the performance of multifamily investing. Our recommendation for novice investors is syndication, with a focus on mid-sized garden-style or mid-rise properties in southern or midwestern regions, emphasizing cash flow and long-term appreciation. Investing in the multifamily sector is not without risks, and thorough research, analysis, and due diligence are necessary to make informed decisions. Diligence are